And so there's going to be demand for all these commodities, in particular energy. And so natural gas will go through the roof, oil will go through the roof, copper will go through the roof. Every base metal will go through the roof. Gold and silver will. I predict gold will go to 20,000 and silver will go to 400 to 500. And I have a call on the dollar that we'll see it certainly down to 90 this year, and I think we could see it down to 80 this year. So obviously, I'm very bullish gold. I think gold. I'm calling for 3,000 gold this year, prior to the bust. So the bust will take all assets down, or all assets, but maybe treasuries. But I think prior to the bust, which means the next 6-7 months, I think you could see gold up to 3,000.
Can you talk us through what you're expecting from stocks here going forward?
Sure. I actually think 2023 may be a record-setting year, a year unlike anything we've seen. I've been doing this almost 50 years now, and I think this may be unprecedented. I'm calling for the S&P to get above 6,000. I have used the number 6,000 plus because I don't know whether that means it's 6,200 or 7,000, but I know that sounds like a crazy reach from here, especially with the majority of investors looking for much lower rather than higher. But as you know, I mean, we've been hearing for months that we're in a bear market, and that anything we've had since the October 13 low is just a bear market rally. And I think we're just beginning to disprove that. As you said, we broke above the 200-day, and we're breaking above that trend line as we speak today. And I do think the next stop is probably 4,300, and then from there 4,600. And I don't think it'll take very long to get to either one of those levels. From there, it's a little hard to tell whether we have 10% pullback or whether we push through and just keep going. And I'm kind of known out there for using the term melt up. You see that term a lot now. I say a lot of people misuse it. My melt up definition is the parabolic end of a secular bull market. I think this bull market started in 1982. I date it back to then. Some people want to date it from 2008-9, but I think that was the beginning of the disinflation trend, the beginning of interest rates peaking at 15% and coming down to zero. So PE multiples expanded, et cetera. So I think we've been in a 40, now almost 41-year bull market, and secular bull market. And I think 2023 will mark the end of that bull market in a final blow-off move that takes you, to levels that nobody can foresee right now. As I say, 6,000 to 7,000 is my best guess. And you're seeing the breakout in the Dow already above the 200-day. It's been there for a little while. The Russell's been there. The Nasdaq's right at the 200-day now, I think, and the S&P is just breaking above it. So I think we're in gear, and I think the bear ended on October 13th.
When you're looking to the Fed in the coming months, what are you expecting to hear, or how does that play into this vision for stocks?
Sure. Yeah, as I say, I don't expect a pivot. I think Powell's been very clear, and frankly, I part of my forecast is, and part of my rationale out there is that I think the Fed is making potentially the biggest policy error in its history. I think we've broken inflation, and I think they're still backwards looking, and the bond market's telling you, and lots of the commodities are telling you that we have broken inflation, and that they should have stopped easing well before this. And yet I think they're likely to pause. I'm not necessarily believing they're going to pivot until I think you'll see a pause. And if we're going to get the kind of market move we get, I think we're going to get, Powell's not going to be happy with that. He has, I've spoken about this a lot, he has bought into Bill Dudley's, he gave a speech last April talking about the need to get the market down to 3,000 or lower, to tighten financial conditions. And until we did that, we had no chance of breaking the back of inflation. Powell has bought into that hook, line, and sinker ever since that date. And I think he's more interested or more focused on the stock market in terms of getting it down than he is the economy. and he keeps reiterating he's not worried about, if he puts us into a recession, that's necessary. But it really does seem like he's ignoring an awful lot of indicators that are saying you've already done your job, you've already gone too far, because I think all he wants now is to get that market down. And every time the market lifts its head, until very recently, he's sent his minions out to talk very hawkishly. It was as transparent as anything I've ever seen. They think they're being cute, but frankly, he's so easy to read. He wants that market down to 3,000 or lower, and he thinks he can't stop until then. If he follows through on that, we are going to see I think we're going to see a global mess anyway, but it will be even worse. So my guess is he probably hikes for a couple more of these meetings and then gives it a rest, pauses, and then I think he probably, if we get anywhere near 6,000, he'll probably come back and hike again, thinking he's got, this is crazy. The risk has run away from us, and we've got to get a handle on this. My guess is you'll have commodity prices up, and he'll be worrying about inflation again. It'll be that second move into tightening, and I don't think it'll take many of them that will put us into what I call a global bust. And I define a global bust as something that's almost as damaging as a depression, but at the speed of a recession. So probably won't last much more in the year, but I think it'll be the biggest financial crisis in history, meaning bigger than 2008-9.
When with the situation you described, runaway risk is how it seems like you're describing it. If that's the situation, I would immediately think, how do we as investors kind of go in the fetal position and kind of get through it? Gold comes to mind as one of those options, right? Gold, precious metals, things like that. Gold stocks have obviously had a pretty good run. Spot gold has had a nice run as well, coming off the October lows and now performing the S&P. Is that a surprise from what you've seen with gold? And do you see that sort of move continuing? Is that a good place to focus here, given the uncertainty you're describing?
Yeah, not a surprise to me. I actually, the surprise for me was last spring. I was expecting gold to do what it's doing now. Last spring, it started. If you go back to March and April, it peaked and it looked like it was ready to take off. And unfortunately, the dollar took off instead of gold. Yeah. And it tracks very much an inverse relationship, very close relationship there, where the dollar went from I think 95 to 115 in a matter of months, and gold went from to 2,100 down to 1,620 or 50. So that was my surprise. What we've seen now, it really bottomed in late September with the dollar topping, and again, you're getting the inverse relationship there. And I have a call on the dollar that we'll see it certainly down to 90 this year, and I think we could see it down to 80 this year. So obviously, I'm very bullish gold. I think gold, I'm calling for 3,000 gold this year prior to the bust. So the bust will take all assets down, or all assets, but maybe treasuries. But I think prior to the bust, which means the next 6-7 months, I think you could see gold up to 3,000.